Welcome to our conversation with accounting. In this session, we will try to understand the measurement and presentation of non-current assets of some companies. First, let us see the non-current assets of companies. How are they presented? The composition of the non-current assets, and then we will observe the accounting policies of few companies with respect to the non-current assets. Zomato's non-current asset, we can see Zomato is not a manufacturing company. It provides provides platform, right? So obviously their property, plant, equipment will not be very high. What are the components of non-current assets of Zomato? Non-current assets include property, plant, and equipment, the right of use assets. That means these are the assets which they have taken on lease. Capital work in progress is nil because they don't construct or they don't have any property machinery. Goodwill, we will observe this and understand this more as we get into the accounting policies of Zomato. And intangible assets, a small portion of the total assets are in the form of intangible assets, but we can see that there's a significant amount of financial assets sitting on their balance sheet. So non-current assets composition consists of actually property, plant, equipment, and intangible assets and financial assets. Let us see, and this non-current assets for Zomato account for about 52% of the total assets. In case of HUL, we can also see the same composition because the way the financial statements are presented are as per the Companies Act. So the composition more or less remains same. The way they're presented, they look alike. But what is important is to understand the measurement of those items. The what consists of these items which fall under the property, plant, and equipment. In case of HUL, their property, plant, and equipment is 5,700 crore. Goodwill, we'll again see what is the meaning of goodwill. Goodwill is 17,000 crore, and other intangible asset, which is the significant part of the total non-current assets. For a company like HUL, what are these other intangible assets? Let us see that. What are these other intangible assets for HUL? Let me show you once again. The other intangible assets of HUL consists of brand and trademarks, know-how and designs, and some computer software. So for a company like HUL, obviously a significant part of the total assets will be in the form of intangible assets. And we can see that here, the intangible assets of HUL is 27,925 crore. Okay. For Tata Steel, unlike Zomato and HUL, we can see that around 45% of the total non-current assets is property, plant, and equipment, because this is a heavy asset-driven company. So property, plant, equipment is 64,000 crore out of 141,000 crore. What are the other components of non-current assets? Investments in subsidiaries, and lots of capital work in progress. That means maybe the new installation which has not put into operation yet, new furnaces, new buildings coming up. So therefore, whether it is Tata Steel or HUL or Zomato, you can see that the way the financial statements are presented, the items look alike. What is important is to understand the composition of those items and get a feel of, link the non-current assets with the nature of the business and understand how do they affect. And we know that the non-current assets, particularly the property, plant and equipment, affects the income statement through depreciation, and intangible assets affect the income statement through amortization. Financial assets also affect the income statement either through impairment, amortizations, or also the incomes and losses on those financial assets. Similarly, we can also see that a non-current assets of a pharma company, a significant amount, reasonable amount of the total non-current asset is property, plant, equipment. But here also, there is a big amount of long-term investment sitting on the balance sheet. That means they have invested money in several companies, which are subsidiaries, and these are long-term. So that means they were to keep their investment on hold for getting some benefits. The benefits may be in the form of their patents, or benefit may be on the form of their customers. The benefit may be in the form of the raw material input, or just a long-term investment. So we can see that whether Sun Pharma or Tata Steel or HUL or Zomato, the non-current assets account for a significant part of the total assets of the company. But to understand more about these items and how are these measured, how are these shown on the financial statement, there is a need for us to understand the accounting policies. For this purpose, we would like to focus on one of these four companies, and that is Zomato, and understand their accounting policy. So this I picked up from the annual report, and so the property, plant and equipment are actually stated at cost, which is as per Ind AS 16, that the PPE should be shown at the cost, less accumulated depreciation and accumulated impairment losses. So what is this cost, right? What is this cost? The cost includes the cost of replacement of parts and equipment, when also includes the cost of purchase, also includes the major inspection performed, and any other repairs and maintenance which are recognized, which will help in improving the productivity or income generating activity. Besides this cost, we also know that cost of a property, plant, equipment is a purchase price plus the incidental expenses required to bring the asset into working condition. So property, plant and equipment is governed by Ind AS 16, whether it is Zomato or Tata Steel or Sun Pharma or HUL. All measurement principles are that the initial recognition should be at the cost, and the cost is the purchase price plus incidental expenses. Work in progress, work in progress means actually they purchased the asset, but the asset has not been put into operation. So therefore, they are also shown at cost and less of accumulated impairment losses. We'll see what is that impairment loss in a minute. And depreciation on all the properties and equipment by Zomato provided on straight line method. We know that depreciation can be charged, calculated by using different methods, but most of the companies that you see will be following the straight line methods. And so this depreciation has been used on the basis of, or been determined on the basis of the estimated life. We also know that the life is also proposed by the Schedule 2 of the Companies Act. However, the management is a freedom to to have a period less than their estimated life, so that the idea is to recover the cost early. So the property, plant, equipment, which we saw on the balance sheet of Zomato, which is 233 crore, that consists of actually air conditioners, equipments, furniture fittings, computers, plant and machinery, motor vehicles, and telephone instruments. These are the equipments for Zomato. And how do they depreciate? What is the life for which they depreciated? The air conditioners over a period of 3 years, electrical equipment 3 years, computers 2 years, P&M, plant and machinery 10 years. Now, this is what the management's decision. So therefore, there is a freedom. There is an amount of flexibility in Ind AS 16 that you have to charge depreciation at while preparing the financial statement. But the useful life can be decided by the management. But of course, they have to defend, and they cannot just go on changing this life once decided every now and then. Depreciation is also allowed under Ind AS that if the value of the asset is small, around 5,000, then the entire cost can be charged to the income statement as a depreciation for that year. And we also saw that a significant amount of the total assets of Zomato are in the form of intangible assets. Now, what are these intangible assets? What is this goodwill? So, goodwill represents a cost of acquired business on the date of acquisition over and above the fair value of assets acquired. This is a tricky discussion which we'll see when we go to the acquisitions, mergers, and consolidations. So when a company acquires, the money paid is, if it is more than the fair value of the assets acquired, that excess money is treated as a goodwill and intangible asset. So, and normally goodwill is tested. That means at the end of every year, the goodwill is tested for impairment. Impairment means comparing the value written on the books, that is the book value, with the possible market value or fair value. And if the value is, the book value is less than the market value, then the market value is higher, so therefore that is called a revaluation. But the problem comes when the market value is less than the book value. Then according to the conservative principle, then you're bound to impair the assets, and that is called the impairment losses. So if the market value or the recoverable value or the fair value of intangible assets or goodwill or property, plant and equipment, if it is less than the book value, then the companies are bound to show the impairment. So impairment loss has to be shown in the income statement, and the corresponding reduction in the value of the asset on the balance sheet. And this concept of impairment test is applicable only to the non-current assets. So other than goodwill, the other intangible assets are also to be shown, are required to be shown. And we saw in case of in case of HUL, that consists of brand, computer software, isn't it, copyright, know-how. So these are intangible. And these intangibles, they can either acquire separately on their own during the period normal course of business, or they can also acquire by acquiring the businesses. So therefore, depending on the situation, in both the cases, those intangibles have to be shown on the books at the cost. And in the subsequent recognition, there has to be an impairment test for the intangibles also. So therefore, if there is an intangible asset, the cost of acquisition, and if there is a cost of acquisition at the end of the year, there has to be impairment test. So at the end of the year is a cost less any accumulated impairment losses and any accumulated amortization. Amortization means allocating the cost of intangible over the life. Just like we charge depreciation for property, plant, and equipment, amortization is a corresponding number. Here also you require a life. So, intangible assets for a company like Zomato will have brand, consumer contracts, consumer relationship, distribution network, the technology platform, the content, trademarks, restaurant listing platform, and some other. So these intangibles, for the purpose of accounting and for the purpose of amortization, a life has been estimated by the management. So, for example, if I say that the brand value is 10,000, and if I say life is 2,000, 2 years, then amortization per year will be 5,000. That is the relevance of life. That's about intangible and goodwill. So, a company like Zomato, HUL, some pharma companies, you will see a significant amount of non-current assets, maybe intangibles. And at the end of the life, often some of the non-current assets, come to an end of that life. So the company may decide to remove that asset from the balance sheet, and that can be sold. The asset can be sold off to another customer or somebody who finds value in that, or just sell at the same as a scrap. And that process is called de-recognition. An item of PPE, any significant part initially recognized can be de-recognized upon disposal when we find or feel that there is no future economic benefit. So when we de-recognize either by sale or just for the purpose of removing it from the balance sheet, any gain or loss arising from the de-recognition has to be shown on the income statement. But remember, this loss or gain on de-recognition is not a normal operating profit. Sometimes profits may be high because of this type of de-recognition profit, but that is not the inherent strength, it's not the core competence or the core business of the company. So that is about the property, plant, equipment of the company. So the property, plant, equipment of the company, which forms a part of the non-current asset, and non-current asset consists of property, plant, equipment, consists of tangible, which is property, plant, equipment, intangibles like goodwill and other intangibles which we saw, like brand, copyright, computer program, the relationship, customer relationship. These are very, very important for companies like Zomato. So that there have to be a value, and if they purchase that, then that value has to be shown on the balance sheet, and over a period of time that need to be amortized. So therefore, when you pick up a balance sheet of any company and observe a broad category of asset, that is non-current assets, and see the composition of the non-current assets, and once you see the composition, examine and understand the accounting policies of those assets, and then find out the measurement and see the impact on the balance sheet, income statement, and cash flow. Purchase of asset will have an effect on all the three statements. Use of the assets will have an impact on all these three statements. De-recognition of assets will have an impact on these three statements. While examining the financial statements of any company, well,